I love earnings season. It's because after earnings season's over, it's like there's no news, and then they just have like if you're watching CNBC or Fox, whatever you watch, it's they have to inflate some story to make you watch it. But earnings is actually really cool news going on, and that's where I find the most ideas too, because it's not just the companies that are reporting right there. It's just what they're saying in the conference calls, which I mentioned earlier, that are huge, that could lead to more and more ideas. So
yeah, absolutely. I mean, like UPS. I mean, they're just. Even though they didn't give guidance again, but they basically just said, hey, we expect demand to be huge for the foreseeable future. It's like, oh, okay. Huge stock pops, what, 7-11%?
Yeah.
Right after earnings?
Yeah.
Them and FedEx, I don't know how much you touched on it in the past, but we were talking off camera, yesterday, day before. Mm-hmm. You talk about a follow-through from COVID and people adjusting. A lot of things will go back to normal. Things are opening up. Hopefully people get comfortable with going back and saying hello to one another. But there's certain things you're going to do and order online that you may not go back to the old way, and that's going to benefit them. I know Amazon's getting in the shipping business, but hard materials like that and your everyday needs and necessities are great. Waste management reported strong earnings. They're going to grow. Everybody needs their trash taken out, and they're going to grow, 12.5% to 13%, give or take, over the next year. Mm-hmm. Steady. I mean, staples are going to be great, man.
Yeah, it's, you mentioned too that we did talk offline about this where, the stay-at-home stocks. Now, a lot of them did fantastic. You look at Peloton, and Peloton, I think a lot of people are going to be canceling that membership. You've seen the stock come down a little bit. There's some, whatever problems with the treadmill or whatever, safety concerns. I'm not worried about that. I just think a lot of people are going to be like, okay, now I can go outside. I don't have to pay $40 a month for their service, especially when Apple has a similar service where you could pay, I think, $9. Zoom as well as another company, as others as stay at home. You're going to see business slow down as the economy opens. But with UPS, what you mentioned is interesting because they're not going to see a slowdown because there's a large percent. I mean, I think it was 8% of people do spend money on digital advertising, right? It's like 8% of the market compared, not digital advertising, but through the internet. That's how much they spend, right? In retail. That went up tremendously, right, with COVID because you need to get everything delivered. Now, people never used Amazon for that. People, they familiar with Amazon. Yes, they have that. They never really used it to the point where I can get my paper towels delivered. I can get toilet paper delivered every month, constant. And now that you're on that plane, you're not going to come off it because it's so easy, right? I mean, so you're looking at Amazon. It's going to continue to be a beneficiary. And I think you're going to see that come out with their estimates. And I don't think you're going to see a slowdown at all from the reopening trade, which you're going to see in some of these companies. I think it's going to benefit UPS tremendously. Yeah,
like I said, that's hard to argue. Obviously, they just posted a great quarter. Stock's reacting well. The funny thing on Amazon is a league of their own. They can do whatever. They can come out and say whatever they want. They could probably come out and say they're going to get out of the online shopping business and the stock will go up. I mean, they're just doing everything right. Yeah. They can infiltrate any market they want. It's incredible. It's good to see them. They're actually playing this politically correctness and fun game in the stock market because, the rumor is when they announce earnings coming up, it might be Thursday. I should know that. That's my fault. Unprofessional. But there's rumors out there they're going to announce a stock split. And the stock has been moving higher towards $3,500 a share on the news that, hey, because why? Because people mentally like to buy cheaper, quote unquote, smaller dollar amount stocks. So if it goes from 3,500 to say under 1,000 or even a couple hundred or whatever, you're going to see retail investors bid it up because it's cheaper all of a sudden mentally. And that's okay. That's good for Curzio Research Advisory. That's a big holding for us. But it's just kind of funny to see Bezos step away and then them kind of announce this. And, nothing's a coincidence in the stock market, just like politics. So
yeah, pretty much. I could tell you too, Dan, that I mean, Google came out with earnings yesterday. Holy cow, right? I mean, the numbers are, and I mentioned them earlier, $26 in earnings, right? $26.30 in earnings, and that's $10 better than consensus estimates. Now, I want to put that in perspective for everyone because you've seen the stock run up higher, and it's trading at. Let me see right here. I can pull it up for you guys. Where you've seen this stock trade at over 2,400 now. Right, so new highs over 2,400 it's trading, and people say, "Oh, I missed it at $26 in earnings, guys." Which nobody again. The consensus estimate is basically the mean estimate of all the analysts. Which, if I had to guess, more than 30, probably 35, 40 cover them, and sell side analysts like Goldman Sachs, JP Morgan, it blew them out by more than $10. Right, so if you take that. And how do you figure out a PE ratio? It's very simple. You take the price and just divide it by earnings, right? So if you've taken that divided by earnings, they're trading at 23 times forward earnings. That's the cheapest Google traded. Even though it's trading at its all-time high, it's trading at its cheapest level in a very, very long time, and much, much, much cheaper than all the rest of the FANGs. The rest of the FANGs still have to report. We'll see about where they report. Maybe those numbers are insane as well, but most of them are trading at around 30 times forward earnings. These guys are trading, if they're able to use that number, you just times it by 4. Again, it could be up or down a little bit, depends on holiday season, but these guys trade 23 times forward earnings. And YouTube ads up 50%, Google advertising revenue up 32%. I mean, imagine that being your core business is the secular growth in, and everything flows through you as well as Facebook. I mean, what's Facebook's numbers going to look like, right?
Yeah, it's incredible. I mean, to know, and that's a great lesson for investors because, and I admit this, I mean, it's difficult to look at a stock like this run up and not feel like you missed it. And it's real difficult mentally and emotionally to think and argue through that, even though you're exactly right. Hey, it's very cheap here. It's cheaper than it has been in the past. It means you haven't missed the boat. That's a great lesson, and you just kind of have to jump in with both feet and gain exposure to that. So buy a little bit. If you've been waiting on something, I would at least dip your toe or jump right in and commit to whatever your long-term time frame is with something like this.